Hi there. For those of you who haven't met me yet, my name is Genevieve Le Marchal. I'm one of the founders and one of the fund managers at Founders Pad Ventures. We are an early stage venture fund. We're based here in the Pacific Northwest in Oregon, and we invest in a diversified portfolio. We do have a very interesting investment model that is unlike any other type of investment model that is done in anywhere, I believe. And what we have is a very focused and very engaged mentorship program. And part of our mentorship program is bringing education, mentorship, and help to founders and entrepreneurs outside the fund and outside the fold of our portfolio. So this workshop here is one of our free education series workshops that we offer to founders all over the country and all over the world, whether you are interested in getting funding or not, whether you are planning on seeking venture capital or not. We are very happy to be able to help and contribute to the world in this way. So the topic of today's workshop, let me get it going, is how much traction do you actually need? And so this is a question that often stumps founders and just has people feeling really like they're chasing their tail. And I'm sure that you can maybe empathize with that a little bit. So I went ahead and gathered a couple of questions from some founders before getting started with this. And so we're going to go through this deck. This is a perfect workshop for you if you're struggling with how to get traction, you're being told by investors that you need more traction, you're thinking of raising around in the future maybe, and you want to be able to plan accordingly for that. Or maybe you're just advising a business or helping a business that is ready for growth, maybe ready for funding, or you're helping someone with their fundraising and they're getting these questions. So if you fall into any of these categories, this workshop will probably help you. And then if you stay to the end, we're going to have some Q&A. So I'll be able to answer any questions at that time. And we'll also be announcing Cohort 2 of our sales bootcamp. This is really exciting. We did this last year. It went awesome. We're going to be doing it once a year. Enrollment is limited, and we're opening up interviews for early bird registration. So you can get started now, and I'll tell you a lot more about the bootcamp coming up soon. So a little bit about me. I did share a little with myself with you already. My name is Genevieve. And I am the fund manager along with partners that I have of Founders Pad. And let me just make sure we're still recording, you guys. I had a really bad experience before where I didn't hit record. So I want to make sure that we are indeed recording. Okay, pause. Okay, so we're going. Okay, perfect. So I'm paranoid. So anyway, I am one of the fund managers at Founders Pad, as well as one of the partners there. I'm also one of the founding board members of the Accelerate Fund, which is a loan fund. It is not a venture fund. It does not do equity investing. I've been an entrepreneur for maybe about 10 years. Lots of down, lots of up, lots of great experiences, lots of not good experiences, but at the end of the day, a lot of wisdom. My functional expertise is in growth strategy and sales at launch, pre-launch, and scaling stages of businesses. Contrary to popular belief, while investing is a very, very important function of a venture fund at the early stages, the actual investing part is much less of a kind of function than it is the mentorship, the education, what we fancily call portfolio management, which is helping companies succeed. I love education. I love teaching. I like mentorship. That's why I do this. I like this more than, other forms of things. I'm a speaker, so I speak at events for entrepreneurs, do keynote presentations, and I also love to write. I have invested in and work with a variety of different types of businesses. Founders Pad is a diverse portfolio. I work with women-led businesses as well as male-led teams, and I'm very proud to say that we have a very diverse portfolio. And so if you want to find out more about that, please go to our website, founderspad.com. And then this year is a picture of my team. So there's me, as well as my partner star, Chris Capdevilla, who's the founder of Founders Pad, as well as there on the far right, Luann. Oh, the slide go forward. Okay, so our goal, like I mentioned, is to equip founders with the help, the mentorship, and the resources that they need, because early stage startups are really, really tough, and they're very lonely, and it's very hard. Unfortunately, we can't get intimately involved and fund and one-on-one individually mentor every startup and every founder out there, but we are committed to expanding what we offer and helping as many founders as we can be successful, whether you want to build a venture fundable business or not. It just so happens that we have a venture fund, but this is what we're really committed to. And we believe that through this mechanism of helping founders be successful, both those in our portfolio as outside of our portfolio, this is how we as a fund will be successful. We're committed to building an amazing venture fund and a great resource for the entrepreneurial world. And this is part of that. So I'm very happy to have you with me on this journey here. And if this sounds like something that's interesting to you, we are also on social media. You can find us on Instagram. Our handle's Founders Pad Ventures. And then we're on Facebook and Twitter as well. I think that's just Founders Pad, no ventures. So a little bit about my story and how I even got kind of to this place here where I am. It all started with what I call the worst night of my life. And it was a night where I had been telling myself that startup businesses were built a certain way, and that way involved getting an investor and then going and building my idea. And so I was operating that way. And what I had realized at that point was that I had been living a lie and building my business on a total lie, which is that you don't get an investor to build a business. You build a business, it's great, and then you get investors, maybe. So it was this like huge moment, just complete and utter worstest night of my life ever. When I came to this realization, I was actually smacked upside the face with this realization. And I opened myself up to the possibility of doing it differently. And I actually made a commitment to myself in that moment. I said, you know what, from here on out, getting customers and getting sales is never going to be a problem for me. Never. And it has never been a problem for me. There are other things in business that have been a problem, but knowing how to get customers has never been a problem. What I had to do at that time was I had to go to San Francisco to get the support that I needed. And I actually had an opportunity presented to me to go to San Francisco and get that support. It's not like I woke up and sat up in bed and was like, I need to go to San Francisco. I actually got an invitation unsolicited from someone in my LinkedIn inbox that was inviting me to come and do this training thing. And I don't even remember how I paid for it at the time. I just know that I knew I needed to break the pattern. I needed to do something different, and I needed to make a change. And we made it happen somehow, and I went. Anyway, so at that time, I stopped fundraising entirely and decided to focus entirely on gaining traction. And by doing that, this is a shortened version of the story. Within 90 days, we went from zero to a qualified pipeline of $750,000 in potential deals. And of those, we ended up closing about a quarter, so like 200-ish, 250-ish. I had this thing I used to do where I like to drink bubbly and eat French fries. And sometimes if I'm feeling real fancy, I'll get some oysters. So I was at this investor event networking thing, and I wasn't really making much time for those types of things at that point. But I was at this one thing and, eating little snacks on a plate. And I remember just thinking I shouldn't be here. I've got other things to do, and just sitting here talking with people just felt like such a waste of time. I'm sure you've heard know the feeling. And so, I went across the street to finish up an email I had in drafts. It was an investor update. And as I was writing it up, I just was like, I know I need to say something. And I typed and I said, hey, everyone, thanks so much for your support and thanks for believing in what is it we're doing. But as you can see here, I've really got to focus on this other aspect of the business, and I'm just not going to raise money right now. So we're no longer raising money. I'm not doing it. And I sent this email and I sort of like sat back and I was like, okay, that's done. And what ended up happening is all of a sudden my phone started ringing, and then, I started getting text messages and responses on the thread, and people were saying like, wait a minute, like you never, we still haven't had a chance to talk too much. And I really want to see, where this is going. And you never sent me a term sheet, and wait, don't be so hasty, and da, da, da. And I was like, oh my God. And that was the eureka when I realized that traction and sales and traction and sales is the big domino that if you knock that over in your business, everything else, well, not everything, a lot of things will fall over after that. So if you join me on the last workshop, which if you didn't, the replay is available and you can watch it. It's on founderspad.com under news and events. And I think I'm going to put on my website too, GenevieveLayMarshall.com. I just haven't done it yet. I will. Anyway, okay. So I talked about what makes an attractive venture deal. Still the same, an awesome founder. This can be subjective. I might think a founder is awesome. Another investor might not like, it is what it is, you guys. It's personal. Great team and an overall good fit. Is this a good team? Does it make sense why they're starting this business? There's all certain things that we really look for. And if you want to dive more into this topic, definitely watch that other workshop. We're looking for a big market and a very, very viable niche, and ideally a market that is underserved. No one wants to go into something with so much competition that it's going to be hard to get any traction or stand out. At early stage, good mentors and advisors, great mentors and advisors who are very engaged is really important, because you can't afford to have like the full-on team. You just can't. And, honestly, at that stage, a lot of the team members that people are touting, we know they're not really in it for the long haul. They're probably not dedicated to it as the founder. So the mentors and the advisors are as important. We want the founder to know their numbers, but you see here in big bold letters, traction. Great traction is one of the most important things that makes a venture deal attractive. And there's actually several reasons why you should get traction aside from venture capital. It's not just about getting venture capital. You also want to get some traction in order to validate your own investment, not just of money, but of time. Like, get some initial traction and be very clear. Is this going to work? Is it worth my time? Don't be so in love with your idea and the very specific way that you think it has to work that when it doesn't get the right kind of traction, you can't really see around it. And so getting traction is very validating for you. A lot of business ideas might be good. They might be great, but they might not work. Just because it doesn't work doesn't mean it's not a good idea. And traction is really what will kind of fill in that gap. So traction is really hard for early stage founders to get, because those founders are usually not salespeople. So just there's that. Also, traction is hard to get because founders don't have any prior experience of what might have worked before to draw on. They don't have a process that's worked. And so they're trying a lot of different things, and a lot of those things aren't working. Or maybe they get lucky and have something work, but it doesn't work again. So it feels like a lot of spinning. And that's why traction can be so hard. You also sometimes, you could go to a specific trade show, and it's going to be shooting fish in a barrel for you to get the right customers, but you might not be able to afford to go to that trade show. It just is what it is. Or maybe you can afford to go, but you can't have a booth, and whatever that might be. A lot of founders think they can't afford advertising, or they just haven't really gotten to the point where they feel like they can try it. Solid traction really takes time, and startups lack the resources, They lack structure. They lack expertise to properly equip salespeople. So traction can also be really hard to get when you're churning salespeople in and out due to just lack of expertise, lack of resources, and all of that stuff. And if you're in any of those positions, actually, the bootcamp will help you, but we'll talk about that later. So another thing that we see with founders is, people trying to take on their entire market. And we call this boiling the ocean. We understand that your market is big, and we understand that your opportunity is really big, and you want to go for it, and you want to just, get out there and win. If you weren't that way, you probably wouldn't be an entrepreneur. But at the early stage, we don't really need to see you trying to win your whole entire market. And I'll go into that in a little bit. What we do want to see is you creating a scalable and repeatable customer acquisition process. We want to see you gaining a grasp on the costs that it takes to acquire customers realistically. And what are the levers associated, like kind of what are the mechanisms that it takes to not only just acquire the customers, but to serve them. So one example here is I'll give you one from one of our portfolio companies. It's called Ziba Hub. And Ziba Hub is a social networking, like a LinkedIn type of functionality, but for the beauty industry. And so Ziba Hub is designed to serve hairstylists, estheticians, salons and spas, where the hairstylists, estheticians, massage therapists might work, even like tattoo artists, anybody who rents a chair at a place or has a chair to rent or a room or something like that. And it's an opportunity for them to create a profile, match them to opportunities. And so, this is a really big market. There are a lot of stylists, there's a lot of salons, there's a lot of spas, there's a lot of massage therapists, there's a lot of estheticians, there's a lot of nail artists, a lot, right? Well, Ziba Hub is not trying to go out and win all of those people. They're focused right now entirely on just acquiring the salons and the stylists. It's already a dual-ended market, so there's some challenges there. So, and they're focused on creating a scalable and repeatable customer acquisition process to do so. So once they know that they can acquire salons and stylists, they can probably make tweaks to the process and use that to acquire other customers in other cities. But what they are gaining is an understanding that the app and the platform can grow organically. They're learning that what it takes in order to get a salon owner on versus a stylist on, and all those levers. And now she can speak much more clearly to what it's going to take to grow and how the money that she needs to raise is going to be applied and what kind of growth that's going to get. And that's when we start feeling really comfortable making an investment, because the founder really has an understanding of how she's going to use the money. She's not just going to take an investment and go experiment and hopefully get customers. No one wants to really hear that you're going to use people's money to experiment and hopefully get customers. We want to know you know how to get customers before you go out and get an investment in your business. So a lot of the commonly asked questions. So this one came through, and this one is really good because I feel like this is a conundrum that a lot of people run into. So she says, this is a software company, and she's in a very traditional industry. And she's trying to bring a new disruptive type of model to it. So she says, I'm making progress with a certain niche, while I feel my product is better geared toward a different niche. So she's designed it for these people, but these are the people who are buying. That's what's happening. The problem is my target niche is quite difficult to penetrate. And I think, actually, I can't remember it, but I think she said something about how it takes a lot of time, probably among other things too. They're very traditional. So do I roll with the traction that is developing organically over here and continue to build the product that she's building for these people and or do I wait until I have the traction within my target niche? Okay, so there's a lot of considerations here. Definitely a lot. So I touched earlier, there's two reasons for traction. One is runway, just money, like getting customers in the door who pay you so that you can have enough money to keep the lights on. So, if you are in a situation where you need those customers rolling in the door in order to continue to get paid and keep your lights on, if you don't have time to invest in billing out something and not having that income, that is definitely a consideration. And if that's the case, then I would say definitely continue with the niche that's paying you. And maybe, this would be sort of a coaching conversation, but, maybe coming up with sort of a plan 6 or 12 months, down the road for, creating some cushion or some automation or something like that, so you can try to serve these customers. However, these customers who are over here, they're hard to acquire, potentially for a reason. And I would be very, I would ask yourself some really hard questions about the difficulty with acquiring these customers. The first one being that if their sales cycle is really long, that's not really something you can control. That's very common. And if the sales cycle is really long sales cycles will kill businesses. They just will. And so it could be that maybe that's just not the right customer for you to serve right now because their sales cycle is just too dang long. A lot of things happen in companies during a long sales cycle that can cause you to lose deals during a long sales cycle too. And, so having a deal in your pipeline, I used to have this myself for a year. And then along the way, they have some staff changes. And then all of a sudden you have to start over from square one. It doesn't work. It does not work. So there's that concern about the larger pipeline. The other one is the industry that you're selling to perhaps just too traditional? Maybe they don't really want what you're offering, or maybe they don't want it in the way that you're currently offering it. So those are some of the concerns that I would have about continuing to build the product for the people who aren't buying it. There is a fine line to walk between serving your customers versus building the thing that the market doesn't yet want. And so I would ask myself some really hard questions about why they're not buying and if they really will buy. Because the only validation that your product is going to work in your market is people buying it. People telling you they want it isn't going to, it's not validation. It's only purchases that are validation. So the next question is, will early stage investors ever be truly satisfied with the level of traction of a business before making an investment? Yes, they will. But oftentimes not having enough traction is a really good excuse. So if an investor is not feeling like they understand your business well enough, or they're not feeling comfortable with the risk, sometimes they'll just tell you that you need more traction because they're not comfortable with the risk yet. And that just is what it is. They're not comfortable with the risk yet. So you can either invest in getting them comfortable with it, or you can go get more traction. Just know that with some of these investors who tell you that you don't have enough traction, sometimes you'll never have enough traction for them. They're just not comfortable with the risk of your business, because regardless of how much traction you get at the early stage, an early stage business is a huge risk, and you have to be comfortable with it. So early stage investors will be satisfied with the level of traction. But they're seeing traction as a de-risking mechanism more so than about the money. So it's really not about how much money you've made. It's about how the traction is de-risking the assumptions that you've made. The fewer assumptions we can make, the better. And then the third question here is, what are the best methods for engaging potential customers pre-product in order to develop traction? So there's a couple different ways to do it. It depends on the type of product you're selling. But let's say you're selling a B2B product. It's an enterprise product. One of the things you can do is just essentially create a contract and sell your platform before it exists. There's a lot of ways to make mock-ups. There's a lot of ways to do really great demos of your product. Now you need to be very clear on what your product is going to do and how it's going to work and how it's going to look. And you need to have a really, really very clear sense of what it's going to cost to build and how long it's going to take. Hopefully you've done your homework here. But then at this point, if you've got a customer who's an enterprise customer, you can work with them for them to purchase the product before, and then you build it to their specifications. So hopefully you're not agreeing to build any features that you wouldn't already want. And then you agree on a future date with them when you'll deliver the product to them. So this is a way to get your development funded. And this is also a way to validate what it is that you're intending to build. So if you are not doing like a software or something like that, if you're selling a product, usually you can have a sketch, a mock-up, some really good ones too. I mean, just because the product doesn't exist yet doesn't mean you can't have a very, very realistic image of the product. And so you can do pre-sales and sell the product before it comes out. People do this with books. They will sell books before they come out. They'll sometimes write the book after people buy it. They will sell courses after they come out, and they'll oftentimes design the course after people have indicated interest. So this is something you can do to not just validate before you go in and do the work, but develop the traction before you build the product. And in my opinion, this is ideal. It's ideal. Okay, so what if you don't have any traction at all? What if you have none? We talked about this a little bit before, but you should stop fundraising if you are. And then you should focus on your niche. And if you were on the last workshop, I talked about the 4 layers framework. So here's another example of this one. I met recently with a startup that is an online platform for fitness instructors, but it's actually in person. It's not recorded programs. So someone might say, I'm targeting fitness instructors. Okay, so going 4 layers with that, it would be then fitness instructors. Okay, fitness instructors who teach Pilates. Fitness instructors who teach Pilates and specialize in elderly people. Boom. Fitness instructors who teach Pilates and are focused on elderly people and want to be online brand influencers. So now you've got your 4 layers here. So if you don't have any traction, start there. Then the next step is to build your cohort. So now you can see how tailored your messaging and your marketing and all your outreach would be when you're going this deep. And then you can spin up a much more focused communication campaign or strategy to sell specifically to this customer. So you can do email, you can use social media, whatever it is, but now you know exactly who you're reaching out to have conversations, and your product is so tailored to them that if it truly is something they want, they'll probably buy it. And so you'll know you're starting to get good traction when, and this is like very general, but you've got, let's say if you're a B2B product, you've got 3 to 5-ish paying customers in this niche that are actively using the product. So, you definitely want active users or active engagement with the product. So maybe it's a book, they read it, example. Or if it's a consumer thing, just kind of shooting from the hip, I would say like 300 to 1,000 of these people buying, using, and using it regularly. That's enough to have a small cohort, and you can sort of look at that and start to see like, who are these people? What do they want? What's the story I could tell about them? And then you can also now say, well, where do they come from and how did I find them? And, all of that stuff, and start to build a pipeline of more of these customers. And then you'll have a more realistic timeline of when you'll close them. So this gives you a much more concrete sense of where more of them can be acquired and how much it might cost you. And that gets you honed in more on what those costs are and things that we talked about earlier. And then if you're pertaining to investors, you can then tell the story, like, this is how big my business could get if I just sold to these 4 layers. And then you could say, and then over time, this is how the product will continue to develop to serve them. So now you're talking about your bigger vision. And then you're talking about what niches you would jump into from there. And then your financial forecast should support all that. So transition a little bit. Here at Founders Pad, we have a mentorship focused program. We're focused on getting companies through the valley of death, and that requires a lot more than capital. A lot of the focus that we have with our early stage companies and companies that we're trying to get to fundability or are funded is on traction, and getting them to that next stage or milestone so that they can become fundable at the next step or profitable or whatever that might be, sometimes both profitable and fundable. Actually, we usually want them to be profitable. There's very few occasions where we don't want them to be profitable. So we have a unique mentorship program that actually engages the companies for 18 months. And we bring teams of people who are highly qualified to work with the founders during that time on a weekly basis. So it's not passive mentoring. It's not like occasional coffees. It's very, very focused. These people are an extension of your team. And our goal is to build an immense amount of value into the program. So here's just a quick snapshot of some of the mentors that we have. These are not just people who decided one day that they wanted to mentor a startup. These are people who are highly qualified and also have the right personality and the desire and the expertise to help companies. So if you want to learn more about Founders Pad and learn more about our fund and our mentorship program, I highly encourage you to visit founderspad.com. And then also, as I promised earlier on, I wanted to share with you guys about Cohort 2 of the Bootcamp, which is opening in September. So we did this last October. We're going to do it in September this year. It starts with a 2-day intensive workshop, which is going to be here in Portland, Oregon. From there, the class will get 6 weeks of personalized coaching, instruction, and feedback. And so what it does, the goal is to actually work with you and alongside you to implement a scalable and replicable sales process step by step. You're going to get stuck. You're going to get tripped up on things or something that you think is going to be easy. You're going to run into roadblocks, and just having other people who are kind of working through it with you is really helpful. And then you'll have a place you can come each week. You can get feedback. You can share your wins. You can share your frustrations. You can, and you can get help from other people in the group, as well as from myself and the other mentors in the program, to help you get through some of those things that are blocking you and holding you up. It also comes with a little online area that has lifetime access. So you'll be able to get in there and learn about various topics when you need it, sort of in an on-demand format. Up to 2 people per company can participate in it. So it's a great way to start training and building your team if you're at that stage. And we are starting interviews. So we are interviewing people we have 30-minute interviews because we want to make sure that we can truly help and make a difference. If someone's coming into the program with the wrong expectation, they're looking for a quick fix or, something that we're not, then we want to make sure that that gets sussed out really quickly. And for those of you who want to commit early, we do have limited enrollment because we're trying to ensure that we can personalize and have enough time to spend one-on-one and individually with people. So we do have an early bird discount, and there will be payment plans and such available. And anyone can participate in the bootcamp. You do not have to be one of our portfolio companies. We do not take any equity, none, for your participation in the program. And you don't even have to be venture fundable. If learning how to grow and scale in a sales bootcamp is what you would be interested in, you do not have to be a venture fundable company to benefit from this. In fact, I would say 75% of the cohort that we had last year was not a venture fundable business model, and that's fine. So what we cover is, this is sort of at a glance. So we have the intensive workshop, which is all about strategy, your strategy, wireframing, your approach, all of that stuff. Week 1, we talk about systems, funnels, and KPIs. Week 2, we talk about generating inbound leads, which is a hot topic. Week 3, we talk about events, speaking, and selling from the stage. Week 4 is catch up and implementation week. So we have office hours, but we're not giving you new content. Week 5 is conducting discovery calls. Week 6, we talk about how to tell stories in your sales conversations, which can actually move along a slow sales cycle much quicker. And week 7, we talk about cash flow in your stability plan and how to actually try to get off that roller coaster of, craziness in your business in terms of cash flow and what that might look like. If you're interested in learning more, I'm going to send out a link, and then, also I'll give you guys a link here in the little chat window as well. So if you're interested in learning more, you can basically just sign up for a time, and we've got designated time slots set up to have the interviews, and we will get you on the schedule. I'll also send a link in the email, and that is how this works. So for more information, you can go to founderspad.com, and in the footer, you'll see the Bootcamp is a link there. You can also go to GenevieveLeMarchal.com/bootcamp and find the information there. So does anybody have any questions? Additional questions, I should say. No one? All right, great. Well, if you do, you guys all know where to reach me. You can hit reply on any of my emails, shoot over a question, and we will be hosting these workshops. I like to do them every other week, but that's a little much, so I think they're monthly. But if there's a topic that you really want to hear about, I'd be happy to explore covering that for you. And I will see you guys on a future workshop. The replay will be going out for those of you who did have a chance to make it to this one. So if you signed up and, oh, hi, Steve. If you signed up and you didn't have an opportunity to make it live, your replay link will be coming out probably tomorrow as soon as it has an opportunity for the video to render, for me to post it, and there's a bit of a process there. All right. Thanks, everybody.